Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm very excited, as usual, to welcome you to another promising edition on the Extreme Speed Live. And before we go into the details of our analysis for today, I would like us to run through our daily routine just to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. Typing in hi will give me a positive feedback that we are good to go and that we are on the same page, and then we can kickstart the session. So I look forward to your feedbacks. Thank you very much as you do so, while I also load up my comment box. Thank you very much, guys. All right, so I can see a couple of comments here from Kimes. Good morning to you, Kimes. Thank you very much. Hello, Carrie. Good morning to you. Glad to have you back this morning. Uh, and I can see Jacob 4930. Hello, Jacob. How are you doing today? Glad to have you around today, and trust you had a profitable yesterday. So I think I will take these feedbacks as a positive one. So on this note, I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial landscape from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. And it's quite interesting to state here that since the beginning of the week, we have been phenomenally profitable across all the assets we've been monitoring since the beginning of the week, which is coming to us as a surprise, as we never expected to see this significant amount of profit, especially during the first half of the week. But lo and behold, we are on the positive side of our portfolio. So today, we are going to be looking at how we will be managing these positions, and at the same time try to use the information we have gathered on the chart to position ourselves for the next move. And today promises to be an exciting one, as everyone in the market is looking forward to the Fed Chair Jeremy Powell's upcoming congressional testimony, where he will be doing a testification before the Congress House Financial House Committee today and tomorrow. And of course, whatever he says will definitely be giving us insight into the monetary policy outlook of the United States. So it's likely going to be bringing some traction today. So we are going to be taking all of this into consideration while we review these assets. So the asset we are looking at this week includes the USOILSPOT, the USTech100, the GBPUSD, and of course my favorite asset, which is the XAUUSD. And I have very simple trading setup that we will be using to guide our trading decisions for today. So stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. So for those of you who are joining us for the first time, I hope you are doing well out there, and I do know you will be wondering what is going on on this platform and what is it that we've been doing here. Well, as technical traders, we usually gather here on a daily basis, coming together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York trading session. The session officially kickstarts 10 a.m. UTC, 11 a.m. West African time on a daily basis. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do on a daily basis is to keep tabs with the fundamental factors that is likely going to be influencing the market sentiment today. And for those of you who have been with me for a while now, you know how crucial this exercise is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we monitoring this week, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Now, so far this week, we've had some impactful events, both high impactful and mid-tier economic features. Yesterday, we saw the BRC like-for-like retail sales data from the United Kingdom, which came in below expectation. And of course, we saw how we strategically positioned ourselves for the next move on that one. So we are going to be revisiting that today to see how to move on that asset. Then we also saw the S&P Global Composite PMI, which of course gave us an insight into the manufacturing and services sector of the United States. And of course, the data came in beyond expectation, giving us a positive deviation of 1.87, as we had the actual figure come in 52.5, more than both the expectation and the previous month data. Then the ISM services PMI also came in below expectation, which may be one of the reasons why the dollar continues to struggle to gain momentum in the last 24 hours. So that one came in below expectations on that one. And then we had some couple of speeches later in the day too as well, which I'm here to have an highlight into what was said. But by tomorrow, I should be able to get something for us to chew on and digest ahead of tomorrow. So today, March 6th, Wednesday, we are looking forward to some events. I had to include the mid-tier and high impactful economic events. So let's talk about the high impactful economic event for today. So the first one on our list today is the ADP employment change, which is coming up in about 3 hours from now. And the ADP employment change is a monthly economic report that provides an estimate of the change in non-farm private employment in the United States. And of course, a positive ADP figure indicates job growth, often boosting market sentiment as they suggest a healthier labor market, while negative figures may lead to concerns about economic slowdown and weigh in on the market sentiment. Now, if we look at the previous data for the month of January, it came in at 107,000, and we have economists projecting 150,000 for the month of February. So economists are expecting an expansion in that sector, which is a very good signal, but we'll still need to wait for the actual data to come in to know if truly this is the status of the labor sector. Another impactful event we are going to be looking at today, that's the high impactful event, is the First Chair's Powell testifies, which is coming up in about 6 hours from now, and it's going to be a 2-day activity. Today and tomorrow is going to be holding today and tomorrow. So the Fed Chair is going to be testifying before the Congress providing a broad overview of the economy and its monetary policy. So his remarks are going to be published ahead of the appearance at Capitol Hill. So we want to be looking forward to what he has to say. And due to the fact that since the week began, we have seen how the US dollar had struggled across all board. And I have a strong feeling that the Fed chairman likely want to impute some hawkish remark today to boost the US dollar, which may likely signal some significant traction in favor of the dollar. So we are going to be looking at how we shall be positioning ourselves for the outcome or during the ongoing process of that session. Then we have some couple of speeches coming up later in the day. We have Dali, we have Beige, and we have Kashkari. So I would encourage us all to mark out the timing of the speeches and events so that we can align our analytical approach to this timing so that we can position ourselves for the reaction of the market. Now, the speeches here today will be giving us an insight into the Fed's monetary policy stance, economic outlook, and potential future policy action. So they are very, very important events that we want to be looking forward to. And it's important to also note that the anticipation of this event has a way of influencing the way market participants will behave in this financial environment, and this usually reflects on the chart as price action. So what we are going to be doing today, as always, is to sniff through the current market dynamics so that we can look out for patterns and structures that can help us to strategically position ourselves for the next move. So I encourage you to stay tuned in, grab your favorite beverages, and stay tuned in so you don't miss out on any of the ideas we will be deliberating on today. I see your comments. I see you, Tresia. Good morning to you, Tresia. Thank you very much. Senoti, good morning to you. And Jacob4930 says, I'm not in profit from XAUUSD yesterday, but I still have the trades open. I really hope that. Okay. I'm surprised you are not profitable anyways, but we are going to be looking at that in a moment. So I hope you'll be around when we attend to the XAUUSD later in the session. So with that being said, we will be diving right into the business. And as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. Now, on the USOILSPOT, we've had tremendously an interesting position since the beginning of the week. Remember that we were selling this asset at the beginning of the week, and of course, we did capitalize on over 150 pips in profit before the bullish momentum came in yesterday. So let's quickly look at what really happened at the beginning of the week and what led to the decisions that we made. Now, at the beginning of the week, it was more of price action, range-bound trading activities. As we saw, price action was confined within the $79.80 level and the $79.25 area, emphasizing the prevailing uncertainty in the market during the first 8-10 hours of the new week. And coupled with a range like this, first of all, you know how we use our range-bound trading structure. We exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And to guide our trading decisions on Monday, we added this trend line into the structure we are using, which of course has supported the bullish momentum on Thursday/Friday, I think, of our last week trading session. And one of the things we said on Monday is that if price breaks down the ascending trend line, a retest of structure will be all we need to join a bearish move. And as at the time we were analyzing this market on Monday, price action was currently trading. The ascending trend line has broken. The support line of that range at the $79.25 level also have been broken, and this incited a bearish idea for us. And I did mention that for those of us who missed out on that opportunity, that we shall be looking forward to either a retest of the support line or the retest of that ascending trend line, where we will be having a sell stop order below the support line to join the bearish momentum to the downside. And of course, we followed through with this plan, and we saw the first sell position for the week triggered had the breakdown of the $79.25 level. Then we also added more position at the breakdown of the $78.50 level. So we had about 2 positions as at yesterday. And of course, after moving our stop loss accordingly, we were taking out with a minimum of 150 pips in profit, as we saw buy pressure resume from here. Now, during our live session yesterday, we begin to notice that sellers were finding it difficult to break through the $77.70 area. And of course, if you remember vividly, we newly identified the structure during our live session yesterday, and we said this area had been known to have a memory for buying power. So we saw that since price broke out of the structure here last week Tuesday, we have seen how it has become difficult for sellers to continue the momentum to the downside. And as you will see, every attempt by the sellers to break through has always been met with strong resistance from the buyers. Now, during our live session yesterday, we noticed that sellers were finding it difficult to even come close to that support line. And as a result of this observation, we were projecting a potential reversal pattern after considering the fundamentals factors we talked about yesterday. And as a result of this, we decided to position ourselves at the breakout of the $78.50 level to capitalize on the to validate the reversal pattern and of course join that uptrend move. But as you will see here, though we had a buy position triggered, but it did not last long, as we saw price move about 40 pips before the bearish momentum came in. And for me, I missed out on moving the stop losses accordingly. But if you had done so from your own end, well done and kudos to you. But if you didn't, we must have been taken out from that buy position in a loss. So it's okay, we're still on the positive side of our portfolio, as we were able to scoop in some significant amount of profit at the beginning of the week. And since then, we have seen the current market condition display a character which is more or less choppy since the bullish momentum was taken out. Now, if you look at this, after exiting the buy position at a loss, the market became very turbulent before continuing its downtrend scenario for the third consecutive day. And this was a reaction to the API data that came in yesterday. The US API weekly crude oil stock report revealed a build-up of 0.423 million barrels for the week ending on March 1st. And this is contrary to market expectations of a decrease to 2.6 million barrels from the previous 8.428 million barrels. So though the crude oil stock reports indicated a surge, but it's not comparable to what we usually see in the last 3-4 weeks as it is. So for me, despite the little 0.423 million barrels for last week, I'm still of the opinion that demand is gradually increasing at this point. Then there are other various factors which is guiding the current market structure. We have concerns about demand dragging down crude oil prices due to recent data showing slower economic activity in the United States. Then we also have a warmer than usual winter, which has also led to less demand for heating oil than anticipated as the cold months come to an end in the northern hemisphere. Now, energy markets are waiting for an increase in Chinese crude oil demand that has yet to materialize at this juncture. During last month, China was aiming for a modest 5% growth in 2024, which may not significantly boost its demand for crude oil. And we all know why the health of Chinese economy is important to the US oil market. Of course, China being the largest importer of crude oil in the world, if their economy is not doing well, it's definitely going to be affecting the demand for oil too as well. And if the economy is not doing well, it's highly possible that price may nosedive to the downside. If the economy is doing well, we are going to see increased demand in this commodity. So at this point, things are not still looking promising from that particular area. So, and at this junction as well, it is worth noting that the weaker US dollar could also help support oil prices by increasing demand from buyers using other currencies. Now, what this simply means is that since the dollar is struggling at this point, the dollar is around its lowest point in the last couple of weeks now, and if it continues to reduce in value, this will open up a window for other currency assets, other economies using other currency assets to take advantage and leverage on it to buy the oil. Because when the value of the dollar drops, the price of oil becomes cheap enough for people to convert to the US dollar. You know, the crude oil is a US dollar denominated asset. So this may influence a high demand, that is, if the dollar continues to drop to the downside. So if we take all of these factors into play, how are we going to relate it with the current market structure? Now, before we go into the details of how we will be positioning ourselves for the next move, let's run through the daily time frame to have an holistic perspective into what has been going on in this market in the last 7 to 8 months. And during our first analysis for this week, the first thing we did here was to take into consideration the nature of price action since the month of July of last year, and we came up with our key level situated at the $78.50 area. And of course, you can see how this level had played a major role in determining the direction of price action in the last 7 to 8 months. For the first between the month of July and November, price was trading above that structure until this level was finally broken in the month of November last year. And since November till a couple of weeks ago, price action has been trading below this area to emphasize the strength of the sellers. Now, despite the strong bearish momentum in this market, we saw that at the beginning of the month of December, we started noticing a series of higher lows, giving us a potential reversal pattern to work with, where we have been expecting the breakout of the $78.50 level, which was serving as a potential neckline for that reversal pattern. And in fact, we did saw price breakout of that structure last week, giving us that confidence that we might likely be seeing a reversal move. And at the beginning of this week, we were looking at a potential retest of structure before another wave of bullish momentum will happen. But instead, we saw price break down the key level a little bit to the downside. So we are now looking at if possible, this is a true breakdown or a false breakdown. So we are going to be scaling back into the 1 hour time frame to see if the buyers have any potential to push price to the upside. And in fact, if we consider the fundamentals we talked about earlier, it's looking bullish for me. So scaling down into the 1 hour time frame, you will see what is going on here. So after identifying this $77.70 area yesterday, where we acknowledge how it has a strong memory for buying power, as you will see since last week, sellers have been finding it difficult to break through. Though we had a breakthrough yesterday, but you will see that despite the breakthrough, sellers were finding it difficult to settle below the structure, making it a temporary demand zone to work with for today. Now, in addition to this fact, we were able to connect the series of lower highs. As you will see, this trend line has been supporting the bearish momentum since the beginning of this week. And of course, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we have no business buying this asset, and the only condition that will make us buy is for this descending trend line to be breached and broken to the upside. So with the situation we saw here and the continued buy pressure around this area, we were looking at a breakout of that descending trend line to give us a signal that price will likely be going to the upside. So as a result of this, I added this new level at the $78.25 area as a factor to guide our buying opportunities today. So with my buy stop order above that structure, I had my first buy trigger happen for today, and look at how beautifully the $78.25 area shares a beautiful confluence with that descending trend line. And of course, a breakout of the descending trend line will give us a signal that the trend line may no longer have the capacity to continue to negate the bullish attempts. So as it is right now, we are holding on to a bullish bias on the US All Spot. So I already have a buy position triggered. If you had done so too as well, well done to you. But if you haven't, well, we shall be looking at more opportunities at the breakout of the $78.50 level, where we are going to be adding more. We have multiple levels here, like the $79.25 area, the $79.80, and of course the $80.30 level, to maximize the potential of this bullish move if price action ever gets into those levels. So that is how we are going to be managing a bullish bias for today. So you can see how crucial this descending trend line is going to be serving a purpose for us for today. So you want to be marking out this trend line and the levels we've identified here. So today we are looking at a bullish momentum. However, in as much as we are looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction, and of course take into consideration the potentials the sellers also have. Now, based on the structure we are seeing on the chart right now, what are the conditions that will make us want to sell the US All Spot? Well, first of all, we need price to be below that descending trend line. That is a fact. We need price to be below the descending trend line to structurally support a bearish momentum. But where and which area will it seem reasonable to join the bearish move? Well, I would like to see price action trade and break down the $77.70 area, and in fact I would like to see a retest of structure for confirmation. It could be a retest of the $77.70 or the descending trend line, where continued selling pressure will be all we need to join a bearish move to the downside. So this trend line here is playing a major role in guiding our decisions today. So it's very important you mark it out on your chart, as we will be needing it as a reference point to guide our independent trading decisions for today. So this is my simple view on the US All Spot for today. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you can also use that time to mark out those levels on your chart. So I see a comment to John12345. Good morning to you. I'm sorry about your plight you shared there. So what I will advise you to do is try to contact the support team. If you look at the front of the page of this app, you will see a logo at the top right hand corner of your screen, having the head with an headgear. Click on it and you'll automatically be referred to the contact center, and they will attend to you in due time and give you the best options for you to draw your money. Okay. All right, so I see Jacob 4930 says, so do you recommend to buy US oil at the current price or wait until it gets over 78.5? So like I said, on the US oil spot, we're already within buyer's territory. Price has already, I told you earlier that I already have my own buy position triggered, so I'm already in the trade already. I did mention that. So price action has broken out of the $78.25 level and also has broken out of the descending trend line, giving us a signal that we want to continue joining that bullish move. Now, there are two ways to which you can capitalize on any of these opportunities, which I usually emphasize in this community. The first one is for those of us who are profitable on this asset so far this week. You can afford to risk some of the profit you had made to test waters around this area. That is, if you are profitable, you can place a buy stop order above the $78.25 level to see if it works, and if it doesn't work, you know that you are only risking some of the profit you had made. But if you are joining us for the first time, you don't have any leverage to bank on to jump in that position, then you want to be waiting for a retest of structure for confirmation before jumping in. So in summary, we are already within an area we can call a buyer's territory at this point, as price action just broke out of that descending trend line. So I hope I answered your question, Jacob. All right, so with that being said, and in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. And what a phenomenal week we have on the USTech100 as we sold the breakdown of the $18,290 level at the beginning of the week to trigger our first sell position, giving us a significant amount of profit in that regard. So let's run through what really happened at the beginning of the week that led to the decisions we made. So at the beginning of the week, it was more of a range bound trading activity for about 12 to 13 hours as we saw price action confined within the 18,340 and the $18,290 level to emphasize the prevailing uncertainty in the market at that particular point in time. And you know how we use our range bound structures. We exercise patience and wait for either price action breaking out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And about an hour after our first session for this week, we saw price action break down the support line at the $18,290 level to trigger our first sell position for the week. And in fact, for those of you who missed out on that opportunity, the market was kind enough coming back to retest the structure multiple times, giving us the privilege of joining that bearish move. And since then, we have been selling this asset. Now, during our live session yesterday, we were around here, just somewhere around the 18,100 after price action broke down the 18,125. So we said here that we will be adding more sell position if price action comes back to retest the 18,125, and then we will be maximizing the move if price goes further on to break down the $18,000 area. And of course, you saw what happened. Since the beginning of the week, the first sell position moved over 480 pips, as you will see. The second sell position moved over 300 pips, that's over 780 pips, and then we saw the third position move over 200 pips. So as at the beginning of this week, we were running with over 900 pips on the USTech100. And of course, if you had moved your stop losses accordingly, like we usually do in this community, when price moves significantly in our favor, you must have been taken out of all the sell position, at least with a minimum of 700 pips in profit. And for those of us who capitalized on this opportunity, well done and kudos to you for being on standby. So at this point, we do not have any position running on the USTech 100 at this point. So going into the New York session today, how do we intend to strategically position ourselves for the next move? And to get to understand how to do that, we would like to run through the daily time frame so we can have an holistic perspective into what is going on in this market. Now, at the beginning of the week, what we did was to run into the daily time frame where we took into consideration the nature of price action since the month of November of last year, and that's about 3 to 4 months of historical data. And after taking this into consideration, we saw how price action had transitioned into an ascending channel. So when we connected the series of higher highs, we have the resistant line of the ascending channel, and when we connected the series of higher lows, we have the support line of the ascending channel. And as it is right now, price action still trading within the ascending trend line, which still opens the window for more for buyers to make a statement at this juncture. Now, in addition to the ascending channel, we had a couple of levels. We have a couple of levels here. The first one is our key level, which was situated at the $18,000 area. In fact, you know how we use our key levels in this community. As long as price remains above the key level, we look out for patterns and structures that support the idea of buying. And unless price breaks down the key level, can we start thinking of selling? Now, during our first session for this week, I did emphasize that after price action tested the all-time high at the 18,340, we noticed continued selling pressure from that area, serving as a barrier for buyers. And one thing we did consider at the beginning of this week was that we may likely be seeing a retracement move, which could be as a result of profit-taking activity, especially after price action broke out of that psychological level at the $18,000 area. And one of the things we said at the beginning of the week was that we may likely see price drop into either the $18,000 area or the ascending trend line, where depending on how price reacts to the structure will determine if we are doing an uptrend continuation or probably a sell-off if price breaks down and retests the support line of that ascending channel. So as at yesterday, I did mention that this area around the $18,000 is a crucial juncture where if price gets into this area, we should move all our stop losses and secure the position. Then a further breakdown retest could welcome more selling opportunities. I hope you remember that. So right now we are back into that $18,000 area, which interestingly shares a confluence with the support line of the ascending channel. Now the question going into today's trading session is, will price action respect the support line of the ascending channel as it has always done since the month of November to incite an uptrend continuation, or are we going to be seeing price break down the support line of the ascending channel to incite a sell-off? Now, for us to trade this, we will need to scale down into the lower time frame to see how the market is going to be reacting to this confluence, that is the $18,000 level and the support line of the ascending channel. So scaling back down into the 1 hour time frame, here we are. So this is the support line of the ascending channel we identified on the higher time frame. So you can see it right here, and price is back above the support line. So it's looking bullish at this point since price is back within the ascending channel, but we are not ignoring the potentials that sellers can also come in. Now I would like to extend this key level, the $18,000 area. So at this point I want to risk some sell position if price ever drops below this level. So I would like to join and add more sell positions to my existing trade, and then I will be looking out for more opportunities to sell if price, hold on a second, let me bring my line chart so that I can have a precise point of connection here. So we have hold on a second. So we have the lowest point for this week situated at exactly the 17,825 level. So you do want to be marking that level out right now. So we have the 17,825 level. So we are going to be using that to sell more if price action breaks down this particular structure. So this is the lowest point price action has been for this week. So we are looking out for more selling opportunities, breakdown of the $18,000 area, and if price goes ahead to break down the 17,825 level, we will be adding more sell positions to our existing trade. Now, in as much as we are looking out for selling opportunity, we cannot ignore the fact that we are still within that ascending channel we identified on the higher time frame. And when price action is within an ascending channel, theoretically it makes a lot of sense that we look out for buying opportunity as well. Now, coupled with that is the fact that price is back above the $18,000 area. Now, if it so happens that price action finds it difficult to continue the bearish momentum below the support line of the ascending channel, and we begin to see continued buy pressure around that area, it means that buyers may likely be gaining some momentum. Hence, if we see a reversal pattern, then we can buy the breakout of the neckline and then join that uptrend continuation. Then we have multiple levels that we can use to maximize the potential of that bullish move. So I will be adding one more at the 18,125 if price action goes on to continue to the upside. Then we could be adding more at the breakout of the $18,290 area, and then the highest level for this year is the 18,340. If we price get to that level, we will add more to maximize the bullish momentum here. So you can see how crucial this support line of that ascending channel we identified on the higher time frame is going to be playing a significant role in guiding our trading decisions for today. So I encourage us all to mark that trend line on our chart, the key level at the $18,000 area, and let's see how the market will react to this conference today. So this is my simple view on the USTech 100. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart. Hello Giovanni, good morning to you. Glad to have you around. Okay, Jacob, you're welcome. Edge Lopez, good morning to you. Moa64, good morning. Joker, Bike, and Victor, good morning to you. So Jacob again says, so if the price go under 17,825, you recommend to sell, but what price shall it go over before you recommend to buy? I did explain that in detail, but I will go through it all over again. So what I said here is that our key level at the $18,000 area still remains intact, and as you will see, price action is back above that key level. And you know how we use our key levels in this community. As long as price action remains above our key level, we obviously want to be looking out for patterns and structures that support the idea of buying. And one interesting thing about the key level is how it beautifully shares a confluence with the support line of the ascending channel we identified on the higher time frame. Now price is back into the support line of the ascending channel, is right back above the key level, which makes a lot of sense to look out for patterns and structures that support the idea of buying. So what I said here is that if price in any way comes back to retest any of the structure and we begin to see buy pressure resume around that area, though we will have our sell stop triggered already. But don't worry, but if we begin to see the sellers were losing the momentum to push price further to the downside and price transitions into a reversal pattern, then we can now buy the breakout of the neckline of that reversal pattern and join the uptrend, and of course we will be taking out of that sell position in a loss. So that is what I said here. So looking out for buying opportunities is going to be above the support line of that ascending channel we identified on the higher time frame, and of course the key level had the $18,000 area. So that is what I said there, and I hope I made myself clear this time around, Jacob. All right, okay, so we shall be moving right into the next asset on our watch list. At this moment, I do hope you marked out the levels accordingly on your chart. So the next asset we are going to be looking at today is the GBPUSD, which of course have done tremendously well since the beginning of this week. And remember, we have been buying this asset, and if you are with us since the beginning of the week, I told you that I wouldn't be considering selling this asset at all, even though if selling pressure comes in at any point in time. And I did mention that if you are going to be selling, then you must be probably a counter trend trader, or you are that type of trader who is willing to take advantage of short-term trading opportunities. And one of the reasons why I said I wouldn't be selling is simply because of the fact that price action did break out of that descending trend line we identified on the higher time frame, which I am highlighting right now, as you will see on your screen. And one thing I said is that if selling pressure comes in at any point in time, we might be looking at a move that will probably come to retest the structure in an attempt to join the uptrend continuation, though we saw some attempt by sellers sometime around yesterday morning, and of course it did not last long. As you will see, buyers continue to push price to the upside. Now, for the sake of clarity and for the sake of those who missed out on our earlier sessions, let's quickly run through what really happened at the beginning of the week and what led to the decisions of buying this asset this week. Now, coupled with the fact that we emphasized from the fundamentals that the US dollar is struggling to gain traction due to the US Treasury bond yield not doing very well at the moment. We had a lesser than expected figure from the manufacturing PMI from the US yet last week, which further throws a clog in the wheel of the resilient US economy. And then we also had hawkish remarks from the Bank of England's governor, where he emphasized that interest rate is not going to be cut anytime soon, which could be an attractive window for investors to put their capital in the pound sterling. And coupled with these fundamentals, everything was looking very, very bullish, especially when we saw price action trading above that big support zone we identified at the beginning of the week, especially between the 1.262 and the 1.2600 area. And of course, it doesn't make any sense that we want to be selling above a robust demand zone like this. Now, going into the first 6-7 hours of the week, we noticed how price action was confined within the range of the 1.26670 level and the 1.26520 area to emphasize the prevailing uncertainty in the market at that point. And coupled with the fact that price was trading above an ascending trend line, we were looking out for price breaking out of the resistance line of that range to give us our first buy position for the week. And of course, we capitalized on that one. We added more position at the breakout of the key level at the 1.267 Then we also added more position at the breakout of the 1.268. Then we added one more at the breakout of the 1.267, which of course did not do very well. So our first three position did very well, while the fourth position went into a loss. So we were able to take in about 60 to 70 pips at the first day of the week. Then during our live session yesterday, we saw this bearish momentum come in, and of course it was later revealed that it was a negative reaction to the BRC reports, retail sales report from the United Kingdom yesterday, which came in below expectation. And this of course gave us a scenario where we saw that sellers were unwilling to continue that momentum. As you will see, despite the strong bearish momentum, as soon as price got close to the 1.267, which was our key level, we saw a diminishing trend in selling pressure and of course increased momentum in buying. And when we compare the zone with what happened at the beginning of the week, we saw how this area had been a strong demand zone as well. Now with this character, we decided that we will be joining an uptrend move. And during our live session yesterday, we already saw the breakout of this structure. In fact, we saw an engulfing bullish candle, and we did identify this level at the 1.268, where we said we will be joining if price action comes back to retest the structure. And if you followed through with that instruction, you must have had a buy limit order here, which triggered our second, or is it the fourth buy position for the week. Then in order to help us feel comfortable in our trade, we had a descending trend line marked out here, where we said if price continues to stay above the structure, we shall feel comfortable in our buy position. So in line with this, we had multiple entries. We had the 1.26850 level triggered. We also had a successful breakout this time of the 1.267, as we saw price rise all the way into the 1.27330 area before that strong bearish momentum came in. So as at yesterday, we were able to run a 50 pips move on the first position. Second position moved about 45 pips, that's about 100, and we saw the third position move about 35 pips. So we were running at about 135 pips before the bearish momentum came in. And of course, you know how we do it in this community. When price action moves significantly in our favor, we move our stop losses, protect all position, and if you had done that appropriately, you must have been taken out of that buy position at a reasonable profit of, let's say, a minimum of 70 or 80 pips thereabout. So for those who capitalize on that one, well done and kudos to you. Now, despite the pullback we saw here yesterday, the bullish outlook still remains strong, as market participants are waiting to hear from the United Kingdom Chancellor Jeremy Hunt about the government's plan for taxes and spending, especially with a general election coming up. Now, there is the talk that Hunt might lower the amount of money employees have to pay for national insurance, similar to what was announced last autumn. And due to this, I still held on to that bullish perspective. I told you yesterday that this market is still looking very bullish, and we saw the retracement back into the trend line, giving me more opportunity to join the momentum from here. And in fact, I added two more levels this morning. We had the 1.27130 and of course the 1.27330 area, which is the highest level for this week. Now, I have two positions running at this point, and if you in any way capture this opportunity, that means you have been a good student of the Extreme Speed Live technical analysis session, and well done to you for capturing that move. But if you had in any way missed out on that opportunity, it's okay. I still think the market has the opportunity of giving us more chances to capitalize on any potential move at this point. Now, before we even go into the technical details further, now let me say this: if you had capitalized on the 1.267 this morning and the 1.2713, Please move all your stop losses to an area around the 1.2713 area while we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, it is important that we take note that the US dollar is facing selling pressure at this juncture, which can be attributed to the reaction to the US ISM services PMI data yesterday, which came in weaker than expected. Now, on the other side of the pond, that is in the United Kingdom, retail sales for February didn't meet expectations too. And later today, we will be getting more information on the UK's economic performance with the release of the S&P Global CIPS Construction PMI, which is coming up later today. And at this juncture, market participants will be keeping an eye on the Federal Reserve Chair's testimony to the US Congress. And of course, we have the ADP Employment Change Report for February, both happening today. And for more insight into the US economic situation, this will help market participants to have an idea of what to do. And in this regard, I strongly believe in an uptrend continuation unless the structure states otherwise. Okay, I got a comment now. Someone says that my sound is coming in double. Let me check and see. I think the reason why that is probably you had opened this page and then you went out of the page and then you came back in, so you're having two windows open. So what I would suggest you to do right now is close the app outrightly and come back again. You will see that everything will be fine. Please let me know in the comment section your feedback after doing that. All right, beige. Okay, so like I was saying earlier, I still strongly believe that the uptrend continuation is still very intact unless the structure states otherwise. So we necessarily do not need to go into the higher time frame. But one thing I would like to state here is that the range bound trading activity we identified on the 4 hours time frame, at this moment the resistant line of that range has been broken to the upside to further emphasize the strength of the buyers. Let me show you quickly what it is looking like on the 4 hours time frame. So if you remember vividly, at the beginning of the week we had this simple structure where we saw price action confined within the 1.26700 level and the 1.262 area, and of course, as you will see, price action has just broken out of that resistant line to further emphasize the strength of the buyers in this market. So we shall continue to look out for buying opportunities unless if the structure states otherwise. Now, going back into the lower time frame, I'm looking out for more opportunities at the breakout of the 1.27330 level. So we are going to be having a buy stop order above that structure to maximize the potential of this bullish move we are enjoying. And another thing that supports this bullish idea is the ascending trend lines, which has been supporting this bullish momentum since last week Friday, as you will see after connecting the series of okay, I have to redraw that again. So we have the ascending trend line after connecting the series of higher lows. We have the first one right here, and then we have the second one right here. So we have a couple of ascending trend line, and you know how we use our ascending trend lines in this community. As long as price remains above this ascending trend line, we shall feel comfortable in our buy position. Now, in as much as we're looking out for buying opportunities, what are the conditions that will make us change our bias from bullish to bearish? Well, if I want to sell this asset, I would rather want to see price break down this ascending trend line, and not just break it down. I would like to see a retest of structure for confirmation that truly buyers have lost the momentum, and then we could look out for selling opportunities to the downside, which for me still falls within a temporary trading opportunity, looking at price coming back to retest the trend line here, and that may dovetail to about 50 pips thereabout. So if you are a short-term trader, you might want to take advantage of that move. But for me, I would like to see how far it will go, and if it comes into any of this area or the key level at the 1.267, I want to see how the market will react to that structure. If I find a double bottom structure or any form of reversal pattern, I want to be part of an uptrend continuation. But if it does break down the structures, then this could welcome more selling opportunities. So this is my simple view on the GBPUSD. Like I said earlier, I still maintain a bullish bias on this asset. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 5 seconds due to the limited speed time I have to see if there are any questions before we run into the last asset on our watch list for today. Hello Safri71, hello Masio Trade, good morning to you guys, glad to have you around. Bike, I hope you're still back with us. Is it fine now after logging off and logging in? Please let us know in the comment section. So in the absence of no further questions, I want to move on to the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And I will say here that the gold spot is the most profitable asset on our watch list since the new week has begun, as we have a minimum of 6 or say 4 or 5 positions running in profit on this particular asset, dovetailing to over 700 pips in profit. Now let's quickly run through what really happened at the beginning of the week that led to the decision of buying this asset. Now at the beginning of the week, we had the situation here where price action was initially confined within the $2,086 level and our key level at the $2,080 area. Remember, our key level had been playing a major role in pushing price to the downside since the year 2020. And after price broke out of the structure, we said that if a retest happens, we may likely be seeing price continue the momentum to the upside. Now with a range bound trading activity like this, we exercise patience, waiting for a signal either in the form of a breakdown of the support line of that range to give us an opportunity to sell, which unfortunately for the sellers never happened, or the breakout of the resistant line of the range to give us an opportunity to buy. And lo and behold, we saw price trigger our first buy position a couple of hours into the New York session on Monday, as we saw the $2,086 level broken to the upside. And in fact, we had multiple entries. We had a $2,088 level marked out to maximize the potential of that bullish move. And okay, this one was a personal entry for me. And during our live session on Tuesday, we added another level, had a $2,120 area that was yesterday to join this uptrend move. And then we added another one at a 2,127, which is currently running in a loss, as you will see the last how many hours now? I think about 10 hours or so. Price action has been consolidating at this point, and this is a sign that especially during the Asian session, we saw gold took a dip during that session, reversing some of the gains from the previous day, and this could be attributed to some profit taking activities amidst extremely overbought conditions on the higher time frame. So at this juncture, it is very, very important that we move all our stop losses and secure this current buy position, as we may be seeing selling pressure push price due to the overbought situation we have now. And if you would ask me, all buy position stop losses must be moved to anywhere below the 2,125 and the $2,122 area, while we also give enough breathing space for price action to move around. So with a well secured position at this juncture, what is going to be our next line of action for today? And once again, congratulations to everyone who has been part of this profitable journey. Now, as it is right now, I'm of the opinion that investors may become hesitant and wait for clearer signals regarding the Federal Reserve's potential interest rate cuts before making new trading decisions. Hence, attention is going to be fixed on the Fed chair's upcoming congressional testimony, as his remarks will heavily influence short-term movement of the US dollar and set the tone for market directions. So sentiments are gradually leaning towards the Fed starting interest rate cut in June, especially after some disappointing economic data from the US yesterday that we saw, and these expectations, along with worries about geopolitical tensions in the Middle East and a slowdown in Chinese economy, is helping to support the price of gold. While we are keeping all our existing positions secured, we are also going to be paying attention to the levels on the chart for guidance of potential selling opportunities too as well. Now, with the situation we have here on the 1 hour time frame, and while looking at the structure this morning, I was able to identify a structure that we will be using to guide our decisions today. And if you look at this closely, and after taking into consideration the nature of price action since the beginning of this week, you will see that price action at consistently found higher highs and higher lows. And when we connect the series of higher lows, we can see we have an ascending trend line to work with, and we know how we use our ascending trend line. As long as price remains above it, we will continue to maintain a bullish bias, and the only condition that will make us sell is for that ascending trend line to be broken to the downside. Now, if you look at the structure in the last 1, 2, 3, 4 hours now, you will see that price action has been oscillating along that ascending trend line, and this for us is a signal that we are at a crucial juncture in the market right now, where market participants are looking forward to see what the next course of action will be through fundamental factors, which may be serving as a catalyst, giving fresh impetus into this current market dynamics. And of course, when we're looking forward to major events like the testification before the US Congress, we expect market to go through a consolidation phase, which is exactly what is happening at this point. Now, when we are talking about consolidation phases, you will see that in the last 4 or 5 hours now, the market has been range bound. Let me choose between the 2,129. So I would like to give this a different color to emphasize its importance. So let us give it a wine color instead. So we have the 2,129. So 2,129 level, you see here, we give it a wine color too as well. And then this should, so we have the support line of this range in the last 4 hours at the 2,125 level. That's another psychological area to look out for. So we have it right there. So in the last 4 or 5 hours now, the market has been range bound, as you will see, further emphasizing the prevailing uncertainty as everyone is looking forward to what the Fed chairman is going to say today. Now, with that being said here, we will be using our center of focus is going to be between this range, where depending on how price reacts to this range, will determine what our next line of action will be. So let me zoom it in. So this is where our center of focus will be. So price is currently trading above this ascending trend line. So if this trend line gets broken to the downside, then we will be getting ready to sell, where this signal will further be confirmed at the breakdown of the 2,125. And if price goes ahead to break down the 2,120, we will be adding more sell positions to the existing trade. However, if the momentum is maintained above the ascending trend line in such a way that it breaks out of this descending trend line here, hold on a second, let me show you. So we have the descending trend line, then we will be looking out for buying opportunities. So we want to be sure that we be on standby to capitalize on any of these opportunities. Then a further breakout of the 2,131 $1.50 level will welcome more buying opportunities. And let us mark out this one just in case price breaks out this level before tomorrow. So we have the 2,140. So you want to mark out that level too as well. If price ever breaks out or come close, we want to be getting ready to buy at the breakout of that area. So it's a simple trading setup we have today. So let's mark out this interesting range between the 2,129 and the 2,125. It's a $4 range. Let's see how the market is going to be reacting to this area. So this is my simple view on the XAUUSD for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5 seconds just to see if there are any questions, and then we'll go ahead and round off on today's Extreme Speed Live technical analysis session. Alright, so in the absence of no further questions, we have come to the end of today's Extreme Speed Live technical analysis session. I really enjoyed every single moment today. I love the energy, and you guys are just too wonderful. So today we were able to take on the 4 financial assets on our watch list, which includes the USOILSPOT, the USTech100, GBPUSD, and the XAUUSD, where we were able to identify simple trading setups that we will be using to position ourselves for the next move. So I hope we all marked out these levels and structures accordingly as we have illustrated during the course of the session. If you had done so, well done and kudos to you. So all we just need to do is exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you want to be having a well-defined risk management strategy in place to mitigate you against any risk on your portfolio. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So it's on this note I wish us all the best of luck today, and in fact I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course prepare for tomorrow's trading session, where we will have had an insight into what the Fed chair will be saying in preparation of its conclusion of the congressional session tomorrow. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.